Welcome to a very quick stream because we haven't done a lot of streams. Matt's been busy as well. I'm on Asia time, and he usually likes to go at night. I usually like to stream in the mornings, and we cannot seem to work out a schedule. And I'm about to go to dinner, so we have 5 minutes. I am going right into screen share here. I am not looking at your live chat. If something is not working, actually, I'm assuming this is going out live. If something's not working, feel free to message me on my cell phone. Those of you that have the number, in case something goes wrong, I will keep an eye on that. Some of you end up calling me in that case. Okay, so real quick, what is happening? The monthly chart is on. We've price flipped on the MRI, which is unfortunate, but we are avoiding a red star candle. I am expecting us to avoid a red star candle. I am not expecting us to have a red star candle. I am still leaning more bullish than bearish. We had an MRI buy on the weekly chart. We held the moving average. We clearly established a new closing low, and we have established a new swing low. This is what happened about 10 days ago. This creates a good enough environment to recover and make a low that is here to stay for the rest of the year. Is it a perfect, obvious buy opportunity? The answer is no, but it is a good enough buy opportunity. We held the moving average. We got a weekly MRI buy, and we clearly established a new low, a new swing low, and a new closing low. So this is not a double bottom scenario. I hate double bottom scenarios. Over here, we had the same thing. We had established a clear lower low and a clear lower swing low. Personally, I like the lower swing low to occur after creating a closing low. In the last time this happened, it was the other way around, but they both held the moving average. So this was also a good enough scenario. And if I had to choose which scenario was better than the other, I'm going to say the current scenario was slightly more optimistic than the scenario we had before. But the one thing that was in favor of the time before is that downward slide took a little bit longer. That slide took about 8-9 months. This one took less than 6 months, I think. So the fact that it was longer was a plus sign. And I think as far as the swing low, that was 33%. I think they were about the same. Let me see. That one was 33%, and this one was 31.5%. So as far as the dollar price go, this one was they were about the same. So this is a good enough scenario. So what do we need to be super bullish? We need to do the opposite. We established a new swing low close, and we established a new swing low. We need to do the opposite. We need to establish a new swing high, and we need to establish a new higher close on a weekly basis. So we're almost at a new higher close. The higher close is coming in at just above 86,000, and we need a new swing high, which means we need to be above basically 89,000. If we can achieve these two things this week or next week, it creates the perfect situation to then challenge, challenge new highs basically, because we have a very significant resistance zone basically in this area here. This is the from 90,000 up until 93. So we need to get into that zone and close above the zone. That means we would have broken the ceiling. This would look a lot cleaner on the daily chart, which is where we're going. So I don't even need us to get above this 95,000 at this point. At this point, all I want to see is the break of this daily high, which is at 87.5, and establish a new swing high. So once again, we need the opposite situation. Need a new swing high above 89,000 and a new daily close above 87,000. Um, Ideally, we get the close before the swing. Okay, that's another, just like in the opposite direction. The slower this happens, the better. The slower we get into the $90,000 zone, the better we are. If we can get to an MRI top before getting to 90,000, then create a 1 to 4 candle correction down into the support zone of 84, 85,000, setting us up for a vengeance to break 90. It also allows the long-term moving average to come down, which makes it easier to break. Because if we rally right now into the long-term moving average, that creates a very, very weak situation of double resistance between the former support, which becomes resistance, and the moving average. This is going to be almost impossible to break. And now we're going to end up in a situation where we have no more momentum. We have exhausted. We're going to fall down too far. We're going to then rally again, only to hit the moving average again, only to then get rejected one more time and potentially make new lows. That is not the situation you want to see. The situation you want to see is a slow move into the 200-day moving average, which is the top of that zone, and this current resistance. Then a drop into the support as the moving averages rise, then once again go up into this resistance zone, allowing the moving average to come down, then slowly break over the moving average, slowly, come on, slowly break over the moving average into the prior support, now resistance. And now when we come down off of that, we now will have support off of that same moving average and the prior resistance zone, which will become support, thus creating an opportunity to break out ultimately later on. So this is the path I want to see, slow and steady. Okay, there may or may not be a show tomorrow, but I will definitely bringing you a show when the daily MRI is hitting its top in about 3 days time. On a short-term level, I posted in my little group chat, hey guys, I am bullish right here for this breakout, but on a 4-hour scale, there was going to be an MRI top early this morning, and there is right now. 1 to 4 candle correction. I still think we can break out to about 86, 87,000. We technically got to 86 this morning. I think we will break 86 today, and I think we have a nice little challenge right here at 87, 87 and a half. I don't believe we will break it on this swing, but 1 to 4 candle correction, and then right now, and then probably at the 10 a.m. reversal, I think we can challenge that 87, 87 and a half. I don't think we're going to break it. Maybe the next MRI top on a 4-hour will actually lead to a more substantial correction into an MRI buy opportunity later on, and everything will line up. Where I don't want us going up too far too fast. On this one. Here's the 1-hour chart. Let's see how the MRI is playing it. I really like this breakout here. I think I posted my message early, well, Asia time this morning. I really like this breakout right here into a 1-hour MRI top. Again, 1 to 4 candle a pullback is almost over. So once again, from right here, I do think we can go down a little bit more, but on a 1-hour chart, we're ready to bounce again. So using the 1-hour chart, it could be something like this way, and then a little pullback back to this area here of support, and then breakout. So no matter how you slice it, I am short-term bullish here for the next few days, in line with the daily MRI breakout into 87.5 to 88, and then a pullback with the MRI top. Okay, and that's pretty much it. Hopefully, we're starting to recover on the cycle chart. Oil is still a bit depressed. Gold had a nice breakout. I'm gonna wait for the next gold MRI top, and that could be it for gold. We will keep an eye on that. And Bitcoin dominance is, of course, crushing it. Guys, I gotta run to dinner. Thank you all so much for watching. I was not looking at your live chat, and I will see you all. Maybe I have no idea when, but hopefully soon. Bye, guys. I am still in Bangkok a couple of more days, and then I'll be off to Vietnam. Bye, guys.